Good evening, everybody, and welcome to another live stream by the Option School. This is your friend Pradeep Singla. Today, we'll be discussing about four types of basic iron condors. Now, iron condor is something I can speak for 5 days also, but there are some basic iron condors we all must know because we are ultimately preparing for our trades in options from 1st June, and that will be the time when iron condor will become one of the best used strategies if we know how to use it. Right. Welcome to two members, Mr. Vikas Ratan and Mr. Rohit Varade. Hopefully, you will find the conversation useful. This is the channel where we have got a lot of intelligent traders who practically trade and they give their views on any of the issues any of the members raise. Right. So let us discuss about this very good option trading strategy, which is iron condor. And please confirm if my voice is audible so that we can start. And as well said by Mr. Sharma, first like then watch. Yes, we are definitely looking for decent number of likes. Okay, all of you who are watching this channel for the first time and still has not subscribed to the channel, please go ahead and press that subscribe button. Also, do not forget to press that bell icon also, so that whenever we are coming live, you will get an immediate notification. And we are live uh, almost on all working days at 9 p.m. Okay, thanks for confirming that my voice is audible. And all of you who are already members, you need not press the subscribe button. You need to press the like button. All of us know that, right? So good evening to everybody. Welcome to all. And let us start discussing what is iron condor. Most of you know what is the basic iron condor, but the issue is once from 1st June, the margins required for iron condor are hardly, you can say, 34,000 rupees. This will be the most widely used strategy, and only the people who know the depth of the strategy, they will be able to extract some money from the strategy. Otherwise, things can become pretty difficult for traders who are trading iron condors, which are very plain iron condors. So today I will be discussing very basic iron condors, and then we are announcing our iron condor workshop also. In fact, we are announcing two workshops in iron condors. One is we are conducting independently, and one we are conducting with NSC. So I will be giving in the end of the video, I will be giving you the dates for both of them. And welcome Mr. Satyendran, if I'm taking the name properly. Welcome to this group, right? So Mr. Sharma made 90 points profit. So Mr. Sharma, you're really, you see, making the hay while the sun shines, right? Making profit, decent profits every day. That's really great, Mr. Sharma. Well done. Okay, so all of you who have not subscribed, please subscribe, and all of you who are already subscribed, you know what to do. And again, today I'm not seeing viewers and likes. The number shown on my screen are only 21. I really don't know what are the likes, so I'm always in a blind spot because of some issue on YouTube also. Anyway, all of you are there to take care, right? Both of them will have same content. Yes, Mr. Chetty, both of them obviously will have same content and same fees, and everything will be same, right? Okay, now what is an iron condor? This name is not given by me. This is a standard name given, right? It's a four-leg strategy. Two legs of puts and two legs of calls are there in this strategy. Hopefully most of you know this. Now one of the part of this iron condor is what you are doing is you are selling a call and you are buying a higher call. This becomes a bear call spread. You are selling a call, let us say you are selling a 9,000 call, 9,000 strike price call, and then you are buying a 9,100 call. So this becomes a bear call spread, which is half part of iron condor. Second part of iron condor is you are selling a put, and then to protect that put you are buying a lower put. So four legs are two sold, two calls, two puts, one sold call, one purchased call, one sold put, and one purchased put. Purchased put is lower than sold put, purchased call is higher than sold call. So these are the four strikes of iron condor. It is always a credit strategy, right? What does that mean? It's always a credit strategy means it will always give you a credit once you create the strategy. The money will be received by you. It's not that money will be given by you. It's always a credit strategy. And the biggest advantage of this strategy is it's a limited risk and limited reward kind of a strategy, Now, depending upon how you create it, you can have that limited reward for all 12 months in a year. And depending upon how you take care of how you create the strategy and how much you know about adjustments, it can be limited risk for all the 12 months also, right? Both the things are very much possible, and I have seen both kind of traders who are losing a lot of money in iron condors, and I have seen traders who are making decent amount of profits in iron condors also, right? So, but good point in this strategy is that risk of wiping out your capital is not there, at least in short term, right? In long term, if I'm creating iron condors and every time losing, obviously I'm eating out my capital. So risk of ruin within a month or within 2 3 months is very less. Otherwise, yes, if you don't handle it properly, since now we will be in a position, maybe from 1st June we will be in a position to create 3 to 4 times of iron condors in our portfolio on whatever money we have. So risk increases with that, because now the number of positions will increase drastically, right? Welcome, Mr. Satyadan, to this group. Okay, if I give you an example, a very simple example, hypothetical example, I have not taken any real numbers in this. Suppose in Nifty you want to create an iron condor. One of the simplest way is, let us say market is at 9,000. You sell a call of 9,300 at 100 rupees, means you will receive 100 rupees, and you buy a higher call of 9,400 at 65 rupees. So you are selling 9,300 call at 100, buying 9,400 call at 65. Similarly, on put side, you are creating a bull put spread, sell put of 8,700 at 85 and buy lower put of 8,600 at 60. So you have sold something. Whenever you sell something, you receive money, and whenever you buy something, you need to give money to the market. So what is the calculation in this case? If you just take a simple calculation, I'm not taking much time on this because most of you know this. So selling premium received is 100 plus 85. By selling that 9,300 call and 8,700 put, you have received 185 rupees. And by buying the protection, which is 9,400 and 86, 94 call and 86 put, you have given 65 plus 60, 125 rupees. So if I subtract selling from buying, net credit received is 60 rupees, right? This is a very basic calculation of iron condor, that okay, whatever is the premium you have received by selling the positions and whatever is the premium you have paid for buying the protections, the difference between two is the credit, and this is the maximum profit possible to you. And if you subtract this profit from 100, that is the maximum possible loss. So in this case, the maximum possible loss is 40 rupees and maximum possible profit is 60 rupees. Why this 100? Because our buying and selling has a difference of 100 rupees between them, right? So this is a very simple calculation and very straightforward plain iron condor which I have shown you. Now, as promised in the title of the video, now there can be 16 to 17 types of iron condors. There can be a modified iron condor, there can be a weird, or also those so many things are possible, but four iron condors are very basic. Anybody who wishes to start trading through iron condors must know that at least these four versions are available, and accordingly he need to take a wise decision. So welcome Mr. Sidhu Sagar to our memberships, and you are free to ask your questions. You can write your questions in the chat window, and either I will answer, or otherwise I have so many friends who can answer any question under the sky as far as option trading is concerned, right? So most welcome to all the new members. Okay, this is the basic calculation of iron condor. Anybody having any question in basic calculation can please ask me. Any questions if you have, please write it in the chat window, and then I will start explaining what are the four basic structures of iron condor. The basic structure of any iron condor is sold call, purchase call, sold put, purchase put. Now, okay, what is the first type of an iron condor? Uh, Iron condor 1, which we have named as far OTM iron condor. Far out of the money iron condor. This means in this case, the trader is selling very far out of the money call and put. Suppose market is at 9,000. I'm giving you Nifty example. Then he is selling a call of maybe 10,000, a put of maybe 8,000. This is very far away, thousand points from the market, and obviously he is buying a further OTM call and put. Maybe he's buying 7900 and buying 10100 as a protection. Now probability of success in this kind of iron condor is very high, because it's a very wide iron condor. So iron condor will start giving you loss when your selling position starts becoming in the money. In this case, your selling position is very far away, and there is hardly any chance, unless and until you see there is a very big crash which happens maybe once in so many months. Unless and until that happens, this iron condor will never give you a loss. This will probability of success is very high, and probably maybe more than 75 to 80%. Welcome, Mr. Vinay Rishi, to our membership. Right now, the problem. What is the problem? If probability of success is very high, and then why we should not do? We should always keep on doing iron counter one. What can be the problem? Can somebody tell me? Mr. Nifty Trader Deepak Ji is an expert iron counter trader. How much capital required in demat account? As of now is around 1,35,000, Mr. Rohit. But from 1st June, it will be hardly 35,000 rupees. So huge reduction of 72% in the capital required. That is why we are trying to prepare ourselves for that scenario. Right? Welcome, Mr. Vinay. Now 1.7 lakh, but after 1st June, it will be 33K. Yes. Yes, Mr. Neeraj is perfect. Mr. Vijay is also perfect. Profit is less. Dr. Rajan, Mr. Mehul. So as I said, we have got excellent experts. The problem in this is this: the probability of success is very high, but the amount of profit is very low. You will hardly get maybe 15 rupees, 20 rupees. I don't mind in case this kind of iron condor I'm getting in 33,000 rupees, and in case I'm making even let's say 10 rupees on 33,000 is 750 rupees. I don't mind doing that, right? That will be still more than 2%, because probability of success is very high. But there is another problem. You can do this because the margins required are really reducing. Margins required will be 33,000 only, and in 33,000, even if you earn 330 rupees, that means 1%, and if you earn 750 rupees, that would mean more than 2%. 750 rupees will still have, let us say, 70-80 rupees to take care of all your cost of trading, brokerage, STD, etc. So still it is rewarding. But only problem in this kind of far out of the money iron condor, which is iron condor one, is one failure can take away profit of many months. I can keep on making those 10 rupees, 15 rupees, maybe for, let's say, 5 months uh, consistently. 6th month, there can be a big crash or anything in the market, and if I'm not able to handle this, and you see, difficult to handle also, obviously, because the credit taken is hardly anything. So it can give you a loss of 70-80 rupees, which can just eat away your profit of previous 4-5 months, right? And so this liquidity is not an issue, Mr. Patel, generally, if you're doing it at the right time, and especially in Nifty. So from this, it becomes very difficult. Then maybe 5 months I made I made profits. Maybe 5 weeks I made profit. 6th week, 7th week, I can make a decent loss. Ultimately, the same story of most of the option traders: 2 steps ahead and 1.5 step backward. Some profit, and after that, again profit, and then a big loss. So that is the biggest problem in this kind of an iron condor, because the credit taken is very low. That increases my risk. Although probability of success is very high, but because the amount of credit taken is very low, 100 minus 15, 85 rupees will be my possible risk. So risk involved is very high. So for OTM iron condors uh, are like that only. All the probability of success high, but then in the long term, maybe in the 12 months, whether you will be able to take that kind of a profit or not, that is something need to be seen, right? What is iron condor number two? Dr. Rajan says, after listening from you daily, this is a group of intelligent traders. All of us are getting feel that we are really intelligent. Yes, all of you are actually intelligent, right? There is no doubt in that. We will adjust it, and we will be trading in next month, and no issues with it. Hopefully no issues with it. But this kind of iron condor, Mr. Sharma, if there is a big wild move in the market, this will more or less will give you a loss. And then if you go to next month, you see iron condor, the other problem is it will not recover you huge amount of money. If you have lost, let us say 60-70 rupees, next month whether you will be able to recover that or not is you see, this is not a strategy which can recover you 200 rupees, right? So that way, losing in iron condor and then trying to recover in that iron condor doesn't make a sense, right? This is out of the money iron condor. That was far out of the money iron condor. This is the more standard and most widely used, most simple iron condor. You're selling out of the money call and put, maybe market is 9,000, you're selling something like 9,400 and 8,600. And obviously, for protection, you're buying further out of the money, which can be 9,500 on call side and 8,500 on put side. Amount of profit is good. If the gap between buying and selling is 100, your profit can be 40 to 50. This is the possible profit. Now, one of the you can say most one of the most wrong things we can do is carry forward our iron condor to expiry. That is the worst thing to be done. So if you're taking a credit of, let us say, 40 to 50 rupees, obviously you're not going to try that, okay, every position will become zero and I will grab all these 40 50 rupees. You need to close the iron condor maybe at for 50%, 60%, and at the most 70% of profit, right? So in that case, 40 to 50 amount of profit is good. Actual profit you will be able to extract is something like 25 to 40 rupees, anything, right? And only problem in this case is probability of success is not high, especially in these kind of markets. In these kind of markets, what I mean to say, when VIX, even after falling today substantially, the VIX is still, I know today, yesterday it has gone down, today it has slightly gone up. It's still in the range of 33, 34. Ideally, if VIX is less than 20 or 25, that would be a much more stable market compared to this VIX, which is still more than 30. Although it has fallen from levels like 80, 60, 50, but still it is not less. And any day market, now these markets we have seen that, okay, any day because of bad global cues, it can go up by 300, 400 points very easily, and it can go down by 300, 400 points very, very easily, right? So these kind of iron condors, although you're taking 40, 50 rupees as a credit, but another 40, 50 rupees is always there, which can cause us a big loss. Okay, Mr. Shetty says maybe the next month FAR OTM premium will be a bit expensive compared to present values because of huge demands. That's something needs to be seen. It's like naked call, naked put. May not be, Deepak ji, it's not a naked call, naked put, because ultimately your loss is fixed. If you have taken 40 rupees, in the worst scenario, in a bad gap up or gap down, maximum loss can be 60 rupees, and that too will happen only on expiry. Welcome, Mr. Kumar B, to our membership. Most welcome, sir. Mr. Vinay says, anyone please answer. I want to apply this strategy in intraday for booking profit 50 point any side nifty go. That is the wishful thing, Mr. Vinay. This 50 points or 40 points you will get only on expiry. This is not a directional trade. This is a non-directional trade, and even market moving here and there, or even if market is stable, it's a slow thing. It will give you profit only when you are reaching closer to expiry, right? uh, if market goes down, yes, then your account will not blow up. It will lose whatever is the maximum loss, and in this case the maximum loss is again very, very limited. Now in these kind of iron condors, although they are very popular, but most of the time when you create this iron condor, you are creating, if you're an expert trader, you are creating with the mind that, okay, market will not remain within these 2 points, market will definitely cross these points, and I need to be ready with my adjustment process, when to adjust, what to adjust, how to adjust. All that plan should be very, very clear to you, because although you're trying for 40, 50 rupees, but you know that, okay, the range is from 86 to 94, and there is 95% chance that market by this expiry will not be within this range. And then what will I do? How can I extract profit from these kind of iron counters? That is something which is worth learning, right? So again, a question, Mr. Rishi says, if Nifty is 9,000, I will buy 89.5 put 9050 call, and I will sell two lots 88 put, two lots of 9200 call, which is not an iron condor. You're trying to do something like a ratio spread. Strangle is best with breaking premium as adjustment. Hmm. I'm saying when a lot of money will be available to you, what you see, if you still remain stuck to strangles, uh, the person with 1,50,000 will be able to make four iron condors. The person with 1,50,000 in strangles will be able to make only one strangle. And whose risk is more? Person who is trading in strangle, the risk will be much higher compared to a person who is trading in four iron condors. And very easily, the person who is trading in four iron condors will be able to make much more consistent profits. I was looking for that slide. I was having a slide wherein a study was done for more than 100 months comparing iron condor with uh, short strangle, right? Obviously profits in short strangle were slightly higher, but when drawdowns are there, when losses were there, losses in short strangle were much more deeper than what it was in iron condor. So that ultimately, if you see, even for 100 months, iron condor stands out from short strangle. Short strangle is a good strategy. It can be very rewarding, but it can be very damaging. It's an unlimited loss kind of a strategy. And when you have more funds available, then it can be pretty damaging. But again, the benefit of new margin structure would not be available for short strangle, as far as my understanding goes, because it's still an unlimited loss kind of a strategy. Yesterday we have seen margins, right? Margins for naked call and margin for naked put are not reduced, rather they are increased, right? So if you're doing a strategy like short strangle, there will be no margin benefit. It will be rather costlier than what it is right now. Okay, for this iron condor we need to wait for long. For any iron condor you need to wait. It's not an intraday kind of a strategy. What is the third iron condor, popularly known as iron butterfly? In this case, you are not selling out of the money positions. What you are selling is you are selling at the money call. Instead of selling a short strangle in between, what you are selling is you are selling a short straddle. You're shorting a straddle, and you're obviously buying out of the money call and put. This is also known as iron butterfly. This is just another version of iron condor, where I'm selling at the money call and put. Now in this case, the amount of profit is good. Generally it is 75 plus, 80 plus, if you're seeing in the beginning of the month. So amount of profit is also very good. uh, Obviously that means risk reward is excellent. So then what is the problem in this case? What is the problem in iron condor 3, or you can say iron butterfly? Let me hear from you. Compared to iron condor 1, iron condor 2, and iron condor 3, obviously here you are getting a lot of premium. Then what is the problem in this? Yes. Okay, we got something. Range is very low, low probability. Probability of profit is less probability. I'll say it's not a question of probability. Yes, probability is also there, but the range is very low. The range is very low within which the profit will happen. Probability of success is very low. And the other problem is, in this case, yes, as you said, adjustment is very difficult. Risk is not high, risk is very less. You are already received 80 rupees. Maximum you can lose is 20 rupees. But the biggest problem is, one is range of profit is very low. The range within which the market should stay on expiry is very thin. And profit comes at the fag end only. If you create this strategy on 1st June, and even if you're lucky that market is going to close, market is going to expire very close to the sold call and put, then also maybe you have to wait till last 3-4 days to get any meaningful 80 rupees out of this trade. You will not get even 20 rupees in first 15-20 days. That is the biggest problem in this. But yes, in case you are very lucky and market just expires somewhere close to your at the money call positions, then definitely you can make a decent profit of 75-80 rupees. Obviously the problem is, any experienced trader would not like to keep his position till expiry. That is why this kind of iron condor, or you can say iron butterfly, becomes slightly unattractive. Even whenever I have done, maybe because of certain other things, we are able to make profit. But otherwise, iron butterfly, is not a preferred strategy in its simplest form. This is not a preferred strategy in its simplest form. Why? Because you would not like to wait. You would not like to wait till last 4 or 5 days or last week of the iron condor, so as to book your profit. That is not at all a wise thing to do for any kind of an option seller, right? So that is the biggest issue. Although your risk reward is excellent, risk reward many times I have seen is even 85-15 or 19-10, so you can hardly lose 10-12 rupees. But the problem is continuously for, let us say, month, 2 months or 3 months or 4 months, there can be iron butterflies which have not given you any profit. So obviously there is an opportunity cost also to your capital. Had I put that money in a bank account, I would have received some 1, 2, 3% today. Even I think further rate of interest is reduced, but at least still there is some kind of a interest I would have received. Right? We can book 50% profit in the middle of the week. If that comes, Mr. Reddy, you don't get even 20 rupees in the middle of the month or middle of the week. You get all the money. If you have done it on a monthly basis, you will get all the money. You start getting money from Monday of expiry week, and in that case also the chance is that okay, by that time the market is somewhere very close to your at the money strikes. That is the biggest problem in this. In weekly nifty it will be slightly costly. Again, in weekly nifty also, Mr. KP, it's very difficult that okay, market comes to your at the money positions, so that becomes a sort of a luck. If we shift our buying lengths in weekly, can this work? It can work. uh, but again, if you compare, if you're sold monthly and you're buying 4 weekly options, 4 weekly options decay can be much more than what is your monthly option decay. So there are, you see, pros and cons of doing everything. You can do that also, but then there are pros and cons of doing everything, because if you're trying to play this strategy for decay, then it's a different game. If you're trying to play this strategy that okay, you are just doing a multiple iron butterflies, and ultimately at one of the iron butterflies markets will definitely hit and it will give you a good profit, then this can be a totally different strategy. Obviously when you're putting in a lot of money, you don't want to enter into a situation that okay, you need to do a lot of micromanagement. When you are trying to protect these kind of strategies with weekly options, you need to do a lot of micromanagement. What will happen that at the end of the week, suppose you have sold 93 9100 9100, and you have purchased something like, let us say, 8900 9100. At the end of the week market is somewhere around 8900, right? Now your monthly sold positions are at loss, and next time when you're trying to buy a weekly protection, it is not available cheap because market is already 8900. So that can be pretty costly mistake. I have done that. That okay, let me protect it with weekly nifty. In case I have sold 9100 pair and I want to buy 8800 weekly, first week it's okay. Let us say market expires at 88. My first weekly option has not given me anything, and now when I start want to buy 88 put, it will cost me a bomb. It will cost me 100 rupees, and everything goes right. So using for weekly, if you want to use it for weekly options, Mr. Bhave, everything should be weekly. Otherwise, if you want to use it for monthly, everything should be monthly. Doing it with monthly weekly can have serious problems. Even if your iron condor is expire, even your butterfly is expiring at the strike prices during the month, it will go to so many directions, and buying all those protections will take away more money than what you're going to receive. That is not at all a wise thing to do, right? So these are the three very simple iron condors. Let me show you another example which is a slightly difficult iron condor, but still much more doable, which is iron condor 4. We call it as an expert iron condor. In this case, what you're doing is you're selling out of the money call and put, but instead of buying protection at 100 points, maybe you are buying call and put at a gap of maybe more than 200 points. It can be 200 points, it can be 150 points, it can be even 300 points, it can be even 400 points, depending upon how much confident you are that you will be able to adjust, right? One of the expert strategies, I will not recommend this strategy to somebody who is new to iron condors, right? Amount of profit is good. Let us say you have done it at a gap of 200 points, then maybe you can collect 90 rupees, 100 rupees, 105 rupees also. So amount of profit, amount of return percentage on the same capital deployed on the same denominator can be pretty much high compared to if you're creating a simple iron condor of 100 points. But then the risk is also high. Amount of loss can also be very high, which can be as high as 100 to 110 rupees, which will be obviously substantial in case you see in percentage terms. So if you created this iron condor, let us say in 34,000 rupees, and you end up losing 7,500 rupees in that, that is 20% loss. And if you're able to make 80 90 rupees, that can be 15 16% profit. So 20% loss versus 20% profit kind of game is this. And the problem is that, okay, you need to be a real expert, extremely expert. Adjustments are required to cover the gap in a 100-point iron condor, since the gap is 25 30 40 rupees. And I definitely expect that, okay, when margins are going to go down, the kind of premium available in a normal iron condor will also reduced drastically, right? So iron condor 4 is again a version of slightly expert iron condor, and there can be few other versions which can be pretty much useful for any trader, right? So these are the four versions. I just want to open up your mind that, okay, don't think that, okay, iron condor is a very boring lame kind of a strategy. You have to buy a call, sell a call, buy a put, sell. It can have so many variations. At least I know another 10 variations, right, which we will share in our iron condor workshop also. Okay, if you have any questions, feel free to ask your questions. And if you have still not liked the video, I'm really not seeing the numbers, how many numbers are there for likes. Please, yeah, go ahead and press that like button. We are preparing you for a very good time for option sellers, right? For the upcoming time, which can be really rewarding for all the option sellers. That will give me a break for water also. Okay, Mr. Vijay has confirmed only 127. That is a poor number. I was expecting more than 150, 160. Okay, Dr. Sanjay has given the latest number. It's like a blood pressure number, right? 144, 127. Anyway, uh, hopefully you must be liking the content. I may not be throwing away all the strategies at you, but I am giving you the basic idea. I'm trying to open up, I am trying to broaden up your thought process on iron condor, which can become one of your you see most utilized tool once these margins are reduced, right? So now we have reached 157. That's really good. Thanks to all of you who have listened to my appeal. uh, which one is the best among these according to you? Yes, Mr. Kamal Bansal, that is the great question. And that is the question which I am going to ask you. You see, yesterday, or I think day before yesterday, we said the ultimate option strategy is not which is good for Mr. Kamal Bansal or which is good for Mr. Pradeep Singla. Ultimate option strategies in which you are comfortable. You should be comfortable. There are many pros and cons to each type of iron condor, and what kind of iron condor you are comfortable depends what is your preparation to do the adjustment in this. If you are good in adjustments, definitely you will try to make only those iron condors. You see, after creating your option position, you should not feel nervous. If after creating your option position you feel nervous, then probably that is not the right position for you. If after creating that option trade you feel really confident and good, that means that is a good trade for you. Are you getting me, Mr. Kamal? And all of you, right? So you must ensure that, okay, you are pretty much happy and confident and stress free after creating the position, compared to a situation where you have created the position, you think it will be very profitable because maybe somebody, Pradeep Singla or somebody, is saying this is a good strategy, and ultimately I don't know how to handle, and ultimately it ends up in a loss, and I am always nervous. That is not a great way to trade, right? You should be comfortable in iron condor 1 2 3 4. I have given you 4 examples. Maybe in our next videos we'll give you another 4 examples. Then you see, first thing is I should have the exposure. I should know that, okay, these things are available, right? In a famous movie, as it has been said, that, okay, if you want to buy a chair, you will sit on 10 chairs. You will sit on first chair, feel how take a feel how you feel, right? And then second chair, third chair, fourth chair, and the chair which gives you a very good feeling, you will select that chair. It's like getting exposed to different models of iron counter, and then you need to pick up your battle, that okay, whether I'm good in rifle, whether I'm good in sea fighting, whether I'm good in air force. So you need to choose that okay, which, and you can only choose once you know that okay, these kind of possibilities are available. Once you don't know these kind of possibilities are available, there is nothing to choose also. Then you think that okay, this is a very lame one single kind of a strategy, right? How you handle it's the main thing. Thanks, Mr. Deepak. Right, that is the whole thing. Okay, our June schedule is on now. Next workshop is on 6th and 7th June, and welcome to all of you who are joining our workshop on 23rd. That is tomorrow and day after tomorrow, and we are full with the batch. And now our next workshop is 6th and 7th June. Again, basic mechanisms, Greeks, strategies for volatile markets, and long-term wealth and strategies used for independent trades will be discussed in this workshop also, again for 2 days. Anybody willing to join, I'll show you the contact numbers, right? Okay, our iron condor webinar, which will be 4 p.m. to 7:30 p.m., and this will be again online. This is on 30th May, right? That is next Saturday. And margins are going to reduce by which date? Margins are going to reduce by 1st June. So this webinar is on 30th of May. This is conducted independently by the Option School, and we have another webinar on 17th and 18th June. In this case, we are going in one shot, 4 p.m. to 7:30, 8 p.m. On 17th and 18th June, that webinar is conducted jointly with NSC. That will be for 2 hours on both the days, 4 to 6, 4 to 6 on 17th as well as 18th of June. This one is conducted by us only. This will be on 30th of May, next Saturday, 4 p.m. to 7:30 p.m. We will cover little. So that's why today we have covered basics of iron condor. So anybody who willing to join should see this video once or twice, and he should know that okay, what are the basics of iron condors, right? So what are the basics, and what are the adjustments in iron condor? What are the guidelines to create? How can you create zero loss iron condors? When to book profit? And when can you convert iron condor into a jeep? And breaking the iron condor, reconstructing the iron condor, all those things with examples we will be covering in this webinar. Anybody who wishes to enroll, obviously there will be a fee, right? For fee details or for enrollment details, you can just WhatsApp at the number I'm showing, 958-285-3463, right? I do all four, depends upon market conditions. For smart hedges, any session on for smart hedges, there will not be a session on 25th, but there will be a video for smart hedges on 25th, because last time also we have experienced in the session a lot of other people join that session, and it becomes very difficult for us to control those many people. So what we are planned is for smart hedges, there will be a special video which will be coming on 25th. It will be visible only to smart hedges. 190 likes, that's good, Mr. Dalal. Thanks for confirming. New margins available for June strategies. No, Dr. Rajan. If you trade in June strategies today, you will be giving the same margins as applicable now. And once it is 1st June and exchange says that okay, now new margins are applicable, then only your margins will get reduced and you will see more money available in your account, right? Uh, the volatility will go on your choice. Yes, if after attending iron condor workshop, if we need some help, what is the way? You can always ask your questions here also, even if without attending the workshop, Mr. Kamal, you can ask your questions here, and then you can ask your questions on email also. This session is always, I'm always open to any kind of questions. Some of you really ask good questions also, right? Smart edges members can anybody can join this workshop. Anybody can join this workshop, right? Open to all. Obviously we also have a commercial interest, right? So but yes, obviously we need to keep numbers limited to some numbers, and if there is an overflow, obviously what we will do, we will shift those people to 17th and 18th in that NSE workshop, right? New margins will be pointed out 1st June, so be ready with extra strategy to put in action. Yes, that is the whole thing. We should be prepared. So do this on 30th of May. and 31st of May you can do your homework. From 1st June you are ready with your sharpened skills, right? That is the whole idea. Otherwise we would have stayed with that 17th 18th thing, but we said okay, if things are starting from 1st June, let us give a chance to most of the traders. They can learn something on 30th May also. Is there a special pricing? Oh, Mr. Mittal, this may not be very costly. This is not 25 30,000 rupees. It will be much lesser than that. So there are no two pricings, right? So no different pricing for anybody. It will be common to everybody, because we are also tied up with the pricing what that NSE workshop is offering. So we have to keep a similar price for everybody. We cannot say that we will charge you 100 rupees less or 100 rupees more. It has to be aligned with that pricing which is already fixed. So details you can get through WhatsApp. Number is shown on your screen, right? But for smart hedges, definitely we are coming up with the video on 25th, uh, which will be useful for all smart hedges, that as per promise, right? Okay, anybody wishing to join our members? Thanks to all the new members. Most welcome to them. You can join our gold membership. You can participate in live chat, and participate in live chat means you can ask your questions also, ask your trades also. Instead of listening to one person, you can have 10 suggestions in this chat. So the main advantage of joining this gold membership is you can always throw your, you see, don't feel shy that okay you're losing or gaining or anything. Any question, any trade you have, please go ahead and write your trade so that all of us can answer with whatever views we have, whatever experience we have, right? And if you don't want to do that, you want that okay only we should see your trades and we only answer your trades, you can join our diamond membership. In that we'll give you a WhatsApp number, and you can always WhatsApp your trades and we will reply to your questions after market hours. And third is, do you don't want to create your own trades, you just want to see that okay what kind of trades can be created, you can join our smart hedges membership. In this, whenever we create a trade, we post it in the smart hedge community section. Whenever we adjust, we post that adjustment also. There is you see a time lag of less than 30 seconds. As soon as we execute the trade, within next 30 seconds we post it on smart hedge, right? So Mr. Soumya says, workshop, I am from Bengal. Oh my God. If internet connection will be good enough. Okay. So obviously very sorry state of affairs there because of that storm. If that is the case, Mr. Soumya, I think then you can postpone it to next time. Or if you're not able to attend, you can ask our people. They will ensure that okay 100% money is also refunded to you. Don't worry about that. But join a workshop when you see, otherwise you are physically comfortable. If you're uncomfortable in your area, if you're uncomfortable with your internet connection or your laptop, then the whole process, you see, it's a tough workshop for 2 days. It's not very easy. It's not that okay I'm going to tell stories and everybody, I'm going to ask hundreds of questions, right? So unless and until you are 100% comfortable, I would not recommend a participation in the workshop. So Mr. Soumya, your money is 100% safe. Don't worry about that. Wish you a very, very safe time there. That's really unfortunate, the kind of natural uh, disaster that has happened, right? Very, very sorry for that. Yeah. We may achieve 200 likes, Mr. Reddy. I can't see any numbers. I don't know how many likes are there right now. Search in the background picture. I knew, Deepak ji, you will say this, and I am ready with the answer. My answer is, as soon as it will touch 20K, I will only change that. Right? I know Deepak ji will say that Nifty Trade that it is 18.3K and this screen is showing 14.4K. Why it's not changed? I'll say, Deepak ji, as the day it changes to 20K, I will definitely change that. I will not change before that. So responsibility is for all of us to make it 20K. Right? So yes, you're in. So Mr. Soumya, if you're comfortable, only then join. Otherwise, it's happening on 6th and 7th also. You can join that also, right? A suggestion, whenever to create or adjust in smart hedge, do notify or no, sir, not at all possible, Mr. Ratan. We cannot do that, right? Is to so many members, we cannot send WhatsApp. As I said, we are not into any kind of a advisory. Basically, what has happened is all those people who have attended the workshop, they said, sir, if we can get some real-time examples. So for them, we have created that smart hedge. But yes, we most welcome anybody to join that. But all the trades will be available only on that community section. No independent messages or WhatsApp are possible at all, sir. Okay, Mr. Ajit says 196, so we are just 2 3 short. And okay, Mr. KP has confirmed, Dr. Thirumal has confirmed, Mr. Sanjeev has thanks to all of you, are really great. You have touched 200 today, and I think with your presence our community is really growing, and that's really a very happy feeling that okay, we have now a good amount of people who are making maybe small percentage of profit but consistent profits even from volatile markets, right? All of our smart hedges must be knowing whatever trades we have given. Except one trade where we lost some 7 8 rupees, otherwise we have always made money in all our smart hedge trades. So far the record is very clean, Sanjeev, right? And we are very conservative. We don't feel bad in that. So thanks to all of you. Because of you we are able to do that service, and some of you have really expressed your gratitude to us. So nice of you. And some of you have not expressed at all, then so nice of you also. We cannot force anybody to do that. 20K subscriber will happen in just a couple of days with your good wishes, Mr. Kukunit. Yes, that should happen. It should happen, hopefully. Which iron condor out of these four basic iron condors you prefer and why? Now the real test. All of you need to answer this question in the comment section within next 1 hour. I will be waiting for your answers like anything. And let's see what kind of. I'm more interested in knowing why. If you say iron condor one, why? Iron condor two, why? Iron condor three, which is a butterfly, why? Or maybe the expert iron condor. So why is more important? You see, otherwise. Just saying iron condor one or two is not okay. You need to specify so that we also learn, right? Member number will increase and margin are going to increase. Definitely. uh, Sanjeev says I still remember that workshop activity of gratitude. Okay, Sanjeev, do not reveal that, because again we are going to do that tomorrow also. Okay, Mr. Saman, I will request you to write that in the comment section once this video is over. Within next few seconds, it will be uploaded, and then you can write it. Why is more important, Mr. Ajit? Okay. So to join our workshops, you can contact us at these numbers. You can send WhatsApp at these numbers if you want to join our Iron Condor webinar. And you can write to us at info@theoptionschool.in. If you have not liked, I'm already very thankful to all of you for having almost 200 likes today. If you have still not liked, please go ahead and like this video. Share this video to somebody whom you think it will be useful. And I'm telling you, this video will be useful to many people, because this is going to be the strategy for next at least 1 year, right? Okay, Mr. Vinay, one doubt: margin change for hedge positions change proportionally volume, and open interest will also stuffle. Can market become still smart and crash retail hedge position? You see, again, Mr. Vinay, if options do not decide where the market will go, option selling or option buying or high open interest do not decide where the market will go. Option sellers or option buyers are people who are hanging around the market. It is actual physical buying in the market which decides where the market will go, right? So even if there is a OI of, let us say, 70 lakh rupees, 70 lakh units at, let us say, 9,000, market can still go below 9,000. Open interest just show where the maximum number of people have positioned their positions. They cannot control the direction of the market. Although a lot of traders are there must be some wisdom that okay, if they have sold puts at 9,000 and there is a 70 lakh open interest, that only shows that okay, a lot of people are feeling like that. But in case there is a heavyweight stock which has given some bad news, market can definitely crash down to 8,800, 8,700 also. And then all those people who are wise enough to sell 9,000 put will definitely shift their position in a way that okay, they are not into loss. So option positions or open interest do not decide where the market will go. Actual physical buying in the shares will decide where the share will go, and actual physical positions based on the weightage will decide where the index will go, right? So for all the details, Mr. Satyan, please contact that WhatsApp number, which is 958285346 on your screen right now. So I'm waiting for your comments. Your comment can be the answer to the question. Your comment can be any feedback, any suggestion, any other question also. So I'm eagerly waiting for all your comments. And if you have not subscribed, do not miss this opportunity. Go ahead and join this group and start posting your questions so that you can get best of the possible answers from best of the option traders. Right? Thanks to all of you. Have a great day. Have a great weekend. And let's see if we are coming on Monday. Monday is a holiday. So all of you who are into trading only, you can relax for next 3 days. And Monday is a holiday. But let us say, let's see whether we will be coming on Monday or not. Right? If we are coming on Monday, we'll definitely post it by 8:30 in the community section. Yes, we are coming, because I would also love to have you all. If I'm coming on Monday, I do not want to have a 50% house with me. So if we are coming on Monday, we'll definitely post at 8:30 so that all of you are there at 9. And if you're not there, if you're not coming, then see you all on Tuesday. Thanks for coming. Thanks to all of you, and good night. Have a great weekend. Thank you.